Oil technical analysis, September 28th, fxempire.com. The oil markets, the light sweet crude market at least, uh, did bounce quite hard on Tuesday. As you can see, it broke the top of the hammer that had formed on Monday, signaling buy signals. It did, in fact, run up to the 85 level, which is the bottom part of this cluster, and we feel that at this point in time, your stop should be at break even. The market will more than likely run into significant resistance between here and 90, as it does contain a large cluster of orders, and as such, going long at this point is not advisable. If you saw the video yesterday, you knew that this move was going to be more than likely for about $4 to $5, and we've already gotten most of it through the day Tuesday. We don't advise selling, of course, but just seeing that progress forward will probably be slowed considerably as we try to head towards 90. Looking at the Brent markets, you can see that we have had a significant move to the upside, very similar to the light sweet crude, except for one thing that's a little different about this chart is that we actually had a shooting star, which is a continuation formation actually when you see at the bottom of a move down, followed by hammer, and then we have broken the top of that shooting star a little bit. We see real resistance closer to 110, and as such, we think there's a little bit more room to move in the Brent markets, at least a couple dollars. So, because of that, we are more ready to buy Brent on pullbacks rather than the CL contract. Although both do tend to move in tandem, the Brent does tend to move quicker than the CL these days because of the spread. We certainly wouldn't sell this contract as we think that the bounce should continue, and quite frankly, even though it is starting to get a softer tone as time goes on, the bullish momentum is still very much intact underneath this very robust marketplace.